Well, South America is probably going to see a good wave of their businesses impacted in the near term. I think the biggest hurdle right now when you're looking at emerging markets is the strength of the U.S. dollar.
Hi, today Dukascopy TV is at Nasdaq in New York, and I'll talk now to Jeff Larocque. He's Managing Director at the Market Intelligence Desk here at Nasdaq. Thank you so much for joining us, Jeff.
My pleasure.
I'd like you to talk a little bit about Nasdaq's history.
Sure.
Please.
Here at Nasdaq we have a pretty exciting story, and we're very proud of it. During the 70s when we started as an exchange, we were the first technology-driven platform out there. Over the course of time, we've evolved, and the markets have evolved, and other exchanges have now taken our platform and started to replicate it. And 99% of all equity trading volume here in the United States is done by a computerized, technology-driven platform. And it's gone over so well that other exchanges across the globe actually purchase our platform. And we really feel that we have a very good offering, and it seems to be going over very well. So.
What about that tech bubble?
So the tech bubble was, prices of equities got very inflated very quickly. But with that said, we pulled back just as quickly. Some people are suggesting that the tech bubble is what we're experiencing now, but we've really seen a nice gradual move higher in stocks, in equities, and it doesn't feel, in my opinion, to be the same. The tech bubble was, companies were going public, and we're getting just overbought too quickly. This doesn't feel like the similar situation that we're going through at this point. Equities are trading at all-time highs. It's an exciting time to be in the market. We're starting to see fund flows come back, and it certainly speaks to the confidence in the markets here in the United States.
Jeff, what are the plans for the rest of the world, especially emerging markets?
Emerging markets, they went to a pretty nice run in 2010, 2011. The United States has kind of taken over as the global leader when it comes to the performance of stocks. But it's we've seen some really nice companies go public here in the United States, here on the Nasdaq especially, and they've really developed into a nice feel. It's great to see a company out of China come here to the United States, be very excited about having exposure to the capital markets, and really see their stock perform well. We saw JD.com, Weibo. It's names like that are iconic across the globe, and they perform very well when they're here trading in the United States. So.
What about businesses in South America?
Well, South America is probably going to see a good wave of their businesses impacted in the near term. I think the biggest hurdle right now when you're looking at emerging markets is the strength of the U.S. dollar. The dollar has been on a pretty good run over the past year. We have gone through a little bit of a pullback, but that's going to be the biggest hurdle when it comes to trade amongst emerging market countries and the United States.
And how do you see Brazilian market?
They like I said, they went through a great period of time. I think we're going through a little bit of a pullback. I only anticipate great things when it comes to companies coming out of Brazil, technology-driven, companies out of Brazil is definitely grabbing some headlines at this point. And, companies here in the United States are starting to take notice of that. So.
What about the better performing stocks nowadays here at Nasdaq?
Well, the S&P has been up almost 8-9% year to date, but the real driver out there are technology stocks. The S&P Infotech Index is up about 20% year to date, and that's driven by the larger cap names out there, some of the more iconic names, Apple, Facebook, Netflix, Alphabet. We've seen some really nice gains year to date, and now we're starting to see them take over. U.S. markets did see some upside in response to the U.S. election, and we surged to the end of 2016. But we've started to see that rally start to stall, but technology stocks have now taken over, and they are the market leaders. Since the financial crisis of 2008, technology stocks have been performing 9 consecutive years in a row. They've posted gains as the markets continue to move higher. So it almost seems like the way that the markets move are driven by what technology stocks are doing. And it's exciting to see what's going on in the technology space. Their core business of these large cap names are performing very well. But it's really nice to see these emerging growth businesses, cybersecurity, automotive, Internet of Things. Those are the businesses that they are now finding this new revenue growth, and that's really what's showcasing in their earnings reports. We saw a great reporting period this past quarter in technology stocks, and it almost confirms what we've seen performance-wise in the technology space. M&A was a driver last year, but now I think earnings are now taking over, and they are the real catalyst behind technology performing in the upcoming year. So.
And what mainly investors search and wait by these companies expect from them?
Well, they expect great things every quarter. If you're invested in a company, you expect great things every quarter. What they're expecting, they want their guidance to be higher. When a company reports their results, they want their forward-looking statements to be more optimistic than more on the bearish side. So that's what investors are looking for. They want to know what is the forward-looking outlook for their company, and what do they have in their pipeline? What do they have that's going to grow their company, revenue-wise.
And what are the main challenges in your area here at Nasdaq?
Well, on the market intelligence desk, what we do is we assist our publicly traded companies on what are the catalysts behind their performance of their stocks. We fully expect the individuals that we're talking to at every company, whether it's the CFO, CEOs, to be running their business on a day-to-day. We hope they're not watching the stock price. That's kind of where we come in. And we feed them information of what we're seeing. But the way that the markets are right now, that we don't see all the trades out there. There's order flow that goes off on dark pools that we don't actually see. From there, it's probably the biggest hurdle is finding out what is going on that maybe I'm not seeing. We have a network of pretty much every bank out there, every trading desk. So we have a good network when it comes to getting information from them, and then we try to feed that information back to our companies and give them the answers that they probably want to hear. So.
And what are the plans for the coming years?
Certainly more IPOs are anticipated. We've heard that the strength in the pipeline of IPOs is very strong, and there's some great companies that are looking to go public. So we expect, quite a few IPOs over the next few years. 2017 hasn't been as strong as we expected originally, but we're starting to see the numbers start to pick up recently, and I'm thinking the second half of 2017 and into 2018 is going to be very strong for IPOs.
Nowadays, how many companies are here at Nasdaq trading?
We have upwards of about 3,000 of companies, and that number is, changes every day. But everybody on the market intelligence desk, we're here to serve those companies and assist them, because being a public company isn't like being a private company. There's a lot of regulatory things that they need to abide by, and we're here to help them out.
And Please, Jeff, a last question. What's the percentage of American companies listed at Nasdaq?
I would say upwards of about 75% of the securities and stocks that we have listed on the Nasdaq are probably domiciled here in the United States, but there's 25% that are headquartered outside the United States, whether it's China, Brazil, Europe. We're well represented all across the globe with companies.
Can this percentage change in the future or not?
Absolutely. As companies grow in those emerging markets that I talked about, that number can certainly tilt the scale a little bit more. Obviously, you need to have a conducive economy for that kind of surge. So if the economy picks up in some of these emerging markets, we might see that number start to get a little bit larger. Go from 25% maybe all the way to 50%, hypothetically. But yeah, it can certainly happen.
Jeff, thanks a lot for being here, for joining us. Thank you.
My pleasure. Thank you.
Luciane Miranda to Dukascopy TV.